Welcome everybody to another eye opener. This is Market Wealth Daily's quick little video chats where we do with top traders. We got Blane Markham here. Blane, what are we looking at today?
Yeah, absolutely. Yeah, John. Yeah, well, a lot of things going on in the market today. Certainly I'm going to start off the call how I always love to. I think it's really important to always kind of take the temperature of the market, take a 10,000-foot top-down view, of just at the index level of what's going on. But some really interesting things coming up in the after hours that, the markets have been kind of looking at for several weeks now. We're by and large through most all of the really significant earnings except for one, and arguably could be the most important one of this earnings season coming up after the bell today. Now, I think there's a lot of evidence to build the case that it's going to be a good report for the Q2 results for this company, but I think what matters more than anything is their guidance they're going to put out. So, we're going to talk about here shortly, exactly what to expect, things like that in more depth. But we're going to get into that earnings report. That's a huge one after the bell today. We also have a couple, a trade idea. Looking at current market conditions, some things that are working right now, showing some really good strength. So that's what I have for the folks today.
Awesome. Yeah, so I'm excited to get into that. And with all eyes on the Nvidia earnings coming out in just a few hours, actually,
Hmm.
it's going to be interesting to see what happens. It is the kind of this beast, and it can really tip the scales. So we'll want to dive into that. So I can't wait to get your perspective. But yeah, let's jump into the broader market and see what we're picking up on the charts of that.
Absolutely, yeah. So we'll start off here, John, and we'll talk, touch on Nvidia here in just a moment. But just looking at the S&P 500 chart right here, of course, this is looking at the past year's worth of trading. So we have a lot of data here on the chart. But you can see, the current price levels right now. We're kind of back stuck in that kind of just slow grind higher again. Of course, we had the just massive expansionary move this past Friday, John. You can see that is this really tall bar right there on the chart. But ever since then, we have had a little bit of follow through. We've kind of hung right in, bounced around that 64.50 level on the S&P. But today's current price, say the market were to close right now, the S&P would be on pace for a new all-time record close. So that's obviously a good sign, seeing the index set up to close at a new all-time record high. But there still is some really, encouraging bullish action on the index chart too. Of course, you can see, a nice consistent series of new higher highs and higher lows over the past couple months. You can see, of course, we had just the index was really just kind of shooting the lights out here. It was just trading, riding along that upper Keltner channel there, really consistent, just making, series of higher highs and higher lows there, really significant momentum and velocity to the upside. But, as we got into the month of August, things have been a little bit more choppy. There's been a little bit lighter volumes trading as to be expected. That's just a seasonal thing. You get lighter volumes typically traded this month, and can kind of set the market up for some of these more wild swings. And we've seen exactly that. So we've seen a lot more choppy trading. We've lost a little bit of that velocity in the momentum to the upside. We still are, of course, in a really strong bullish trend. The trend lines are all still intact, of course, on this chart, John. The 50-day still above the 200-day, really key buy signal. And of course, the index is trading above it, still making those series of higher highs and higher lows. But I did want to point out here, this is just an indicator down here, John, just
Mhm.
illustrating what I was talking about, kind of the slowing or loss of that upside velocity. Again, we're still, in this kind of just slow grind higher, just, edging out a new high here or there, just by a few points, which that by all intents and purposes kind of looks like what the market is doing today, just kind of stuck in neutral. Just, I think there's a lot of folks, really anxious leading into the NVIDIA report after hours today, but that could certainly be a catalyst for change to accelerate the velocity of this index. But you can see right here, this is a rate of change or ROC chart. And this is just a really good indicator, technical indicator of velocity, whether you're looking at an index or stock or whatever it may be. You can see several occasions here where it was spiking, having a really strong slope upward, and you can see the corresponding price action, just incredible velocity. Now, of course, we're still above the zero line, so that means we do have positive price momentum and velocity to the upside. But I mean, you can see this line has kind of stagnated. There's been several occasions through the month of August where It's actually gone down and flirted with that zero line. So
Mhm.
really kind of slowing, velocity. And again, that's just symptomatic of just that more choppy, just kind of, sideways trading that we've experienced this month. Even though we're having that, still continuing to, make several new highs. But that's what I'm seeing in this chart right here, John.
Mhm. Yeah, definitely get that sense on from this chart and just everything that you're looking at. Everyone's just kind of holding their breath, waiting for this big for it to come out. And I think you pegged it right dead on with it's more about what they're gonna kind of uh, foreshadow in the earnings report than it is the actual numbers. Numbers will be great, but there's a lot of questions they're going to have to answer about what they expect to see in the coming period, and that I think is going to have the big impact. The good news, bad news is, it is only an expectation. It's not like it's a hard number. You're looking at things that can really do some big damage. They could come out and say that they're very bearish. They think that things are going to tighten up, that sales are going to drop, and then that could give everybody fear that the AI like expansion is just going to start to slow down, and it's not going to be the rocket ship that it has been. And you can see people start to adjust based on that guidance. It's a lot different than if Nvidia came out and said, "Oh yeah, our earnings are half what we expect," which I don't think anybody is thinking that's going to be the case. But if they
Right.
did, that would be the sign that it was an out of control change. Them changing the forecast is something that they're saying it's bad news, but it's bad news within our control. So
Sure
um,
thing. Yeah, exactly right. And there's some legitimate questions, going into the report that Nvidia has after the bell today. There's some questions around the China business with some of the there was export controls for a bit, and now it's reopened, but now seemingly Chinese government officials are really insisting that people, within country there opt to use, other chips. They're trying to, sway them away from using the NVIDIA, tech stack and American tech stack. So there's some really, significant questions regarding that because that's obviously a bigger growth business. Obviously, NVIDIA and the U.S. and Europe and many other places. They really kind of have the AI market locked down with their AI GPU chips they're making. But there's some significant questions regarding the China business. But feel pretty certain that the Q2 results are going to be good. I mean, we've seen we know who their customers are. It's all the mega cap tech stocks. It's the Amazons. It's Microsoft. Google, Oracle. It's all these stocks that we all know very very well. They've told us exactly what they've been spending. And we know that a vast majority of that spending is going directly to NVIDIA. So, we feel fairly certain that the Q2 results are going to be very solid and show some great growth numbers. But again, yeah, it's like you said, John, the real question mark is that guidance coming up. And, you can see investors displaying that uncertainty in the options market. I looked just before I hopped on, and the NVIDIA options are currently implying roughly a 6.5% move, either up or down
mhm.
following the earnings report later on today in just a couple hours. So, a pretty sizable move that investors are anticipating NVIDIA to have and pricing that NVIDIA option. So that's certainly something to be watching out for. And, even though markets are kind of somewhat stuck in neutral today, just again, barely just sitting at those new highs, but, really essentially flat on the day. Um, that report could certainly be a huge catalyst, whether up or down.
Right.
Obviously, Nvidia is, one of the kind of tentpole stocks for this current bull market. Obviously AI, it's no secret, has been the real driving force behind this. So there's a lot of stocks that kind of tangentially, are linked at the hip to Nvidia and how it's doing, and they kind of all trade in sympathy sometimes. So whether up or down, that report's definitely carrying a pretty heavy weight. But with that, John, I
Yeah.
want to go ahead and move on into the second chart I had for today. And this is it's just that this is an indicator that I always like to look at. There's several different versions of it. This one is specific to the NYSE or, of course, New York Stock Exchange. And this is an advanced decline line, just looking at the issues. So this is, just the actual issues traded through the NYSE, and it's just simply measuring. It's a really good breadth gauge because it's measuring just on a day-to-day basis. the net difference between the number of issues advancing versus declining. And so, of course, when this line increases, that just means more stocks that day that were traded across the exchange rose than fell. And of course, the inverse is also true when we see this trading down. But you can see over the past couple months, we've had a huge spike up, in this NIAD chart right here, the advanced decline line for the NYSE. And so this is a really great indication of just, like I said, it's a great breadth indicator. It's showing you that there's, under the hood of the market, even though, at the index level, we've, lost a little bit of steam, a little bit of that velocity to the upside. We still do have really strong breadth continuing to build under this market. John, if this was a stock chart right here, this was a stock you could buy. This would be one I'd be looking to enter right here. That's, going, up and to the right, and nice series of higher highs and higher lows, and looks like it's, setting up to, make a new high here in relatively short order, based on where it currently is. So just seeing this line sloping up, making that nice series of higher highs and higher lows. I believe these are going to be all-time highs on this, of course. But this is a really encouraging sign, seeing this advanced decline line continuing to trade up, make new highs. It's a really great sign of the breadth underlying this market that's been continuing to build.
Yeah, that's a great question too for me. So, if in fact we have a bunch of traders kind of holding tight, sitting on the sidelines, waiting, where's their money at now? And is it moving beneath the surface of these new record highs? And, where's it starting to move to? And that kind of leads into, what are you looking at? Where would you be putting your money to generate some income in this market?
Yeah, exactly. Well, it's a great question. Of course, obviously given the big report coming up after hours, some of the tech stocks are really kind of tensed up quite tight right now. That rubber band's kind of stretched a little bit. And, again, there could be some pretty significant moves in the after hours today and in tomorrow's trading on the back of that result. But, given that we see that we have some really strong breadth starting to really develop in this market, we've talked about it on several occasions in past weeks, looking at other indicators I like to look at. But we've seen some market rotation. We've seen some money come out of those, momentum leaders, some of the growth stocks that have, really led the market thus far this year, and seen some of that money redeployed to other areas of the market. And so today, John, because of all those factors right there, I actually landed on this stock right here as the trade I was going to highlight today. And so this, of course, is in the financials. This is a sector that has benefited from some of that market rotation we've seen in recent weeks. Of course, the financials have been a strong performer year to date, and that's continuing now. There was a little bit of a chop period kind of along with the market. It has been some consolidation in it, but it looks like they've consolidated. They started to build a little bit of a base and are starting to trade higher. And that's also being reflected right here in this chart for Citigroup. So this is ticker C. Of course, one of the major U.S. banks in Citigroup. And you can see we do have a nice trend line, technical buy signal going on this chart right here. So, of course, here's our 21-day exponential moving average. That's our red line. And we can see that red line is trading above our green line right here, which is our slightly longer term 63-day EMA. And you can look back to roughly mid-May when you see that bullish convergence right there. That's when the buy signal that's currently still intact initiated. The stock just took a massive leg higher, and you can see currently that buy signal is still intact. Really nice wide gap between those two EMAs. And also, Citigroup shares are currently trading above both of those EMAs. Now, I did want to highlight the price action and just kind of the pattern of trading over the past, little more than a month here, John. You can see, of course, Citigroup broke out to a series of new 52-week highs in the back half of July right here. So just had some crazy momentum to the upside. And then it experienced a pretty significant sell-off. It dropped, had a really significant 2-day drop, but it recovered quite quickly. You can see it, traded roughly all the way down to $87 per share, but rallied by the end of this trading day right here back up to above 91. So that's just a really, really wide range for a stock like this. And ever since then, it's just been kind of in this sideways consolidation pattern, just going up, hitting, resistance up here at the previous highs, coming down. But you can see when it traded back down, it made a new higher low. So when you're seeing a consolidation pattern like this in a stock, going up, trading, hitting resistance, and then trading down, but finding support at at a higher level, making that new higher low. You're starting to see that range compress, and when you see the stock bounce back up again, generally when you start to see this pattern form right here, it's going to break up and power through that resistance level, and that's exactly what happened in today's trading. We can see Citigroup finally broke out above that level of resistance. It made, currently in today's trading has made a new 52-week high, and looks like the stock is now in the early stages of a fresh new breakout, breaking out of this consolidation pattern that it's been in. So, really, really constructive looking chart here for Citigroup. And then one final thing here too is that even though despite Citigroup's breaking out today, John, I do have the counter channels overlaid on here too. We can see Citigroup's shares are still trading right about $97 per share, and that's still within that upper counter channel there. So that's still offering us a really attractive entry point for a bullish trade for Citigroup. And again, the one final thing too I want to point out is, John, I always like to look at these relative strength index charts, particularly
Mhm.
when the market's, more of a kind of a slower, velocity, momentum has kind of slowed a little bit. I really like to look at these to find pockets of the market, and find opportunities where, a stock or ETF, whatever it is, find something that's outperforming relative to the index. So even though, at the index level, stocks may be kind of taking a breather, trading sideways, find something that still has really great relative strength and is outperforming the broader index. And you can see Citigroup is doing that. It's been doing that for most of this year. There's been, several, just looking at the past year's worth of trading, there's been several occasions where there's been significant outperformance to the upside, where Citigroup is outperforming the index. And again, you can see of late, the stock did actually, have a bit of a, kind of parity period where it and the S&P were, performing roughly the same relative to one another. But you can see in the roughly the past week, we're starting to again break out to the upside now that Citigroup is starting to gain some, momentum, reaccelerate to the upside. So we're seeing that, relative outperformance in Citigroup start to reaccelerate. And so all those combinations of factors right there had me really excited for this trade for Citigroup today. And so, John, I landed specifically on this expiration right here. I'd be looking to trade this one with just buying a straight directional call option. So I landed on the September 19th expiration here, and specifically the 90 strike call. And you can see it's currently coming in, just about 7.73 points per contract. And so, just a touch under $800 would be able to allow you to enter this trade right here. And I'm actually going to go ahead and place this one here live. Looks like the
Mm.
trade here is, it's coming in at maybe a 5% increment. So I'm just going to go ahead and put my limit order at 7.75 points here and just do a day order. So it's just a limit order at that price right there, just one contract. I'm going to go ahead and fire that one off there and see if we can get it filled. Have a pretty good feeling that, yep, there we go. Just got it filled. You can see there's about 11,000 contracts on the open interest for this one right here. So some really strong liquidity for that contract right there. But yeah, John, that was my trade for today.
There you go. See, that's the kind of stuff that we're looking at. When you do the kind of relative strength, you see that it is kind of outperforming the index. What that tells me is that's where that money is moving. You
Hmm.
know that, great, you got this all-time high, but you're not just buying in the market. Somebody's got to be selling. So you're just having people, a little bit more buyers than sellers. Where are they buying into? Well, if
Right.
everybody's cautious about Nvidia, that means that they're putting their money somewhere else in the time being, and then they're going to be ready to pounce. They might be saying, "Hey, I'm going to just step aside, let the earnings play out, and then not be in that Nvidia trade. But where am I going to be?" This kind of puts a finger on it. This shows you where they're headed. The financials, Citi's a perfect candidate for a trade like this. But
Exactly.
great find, Blaine.
Yeah, appreciate it. And here's the great thing too about Citigroup too is that even though it's been a beneficiary of some of that market rotation of late that we have very clearly documented in our recent calls, even if Nvidia comes out here in just a couple hours once they release their report and guidance, even if they hit a grand slam and the stock is up even more than 6.5%, not saying that's what's going to happen, but just say hypothetically that is what happens. It's not like Citigroup, the reasons and the story for that stock rallying, it doesn't mean that story, is invalidated at that point. The financials can continue to rally, even if Nvidia does shoot the lights out tonight. Even if they do just knock it squarely out of the ballpark. So that was, a really encouraging thing too. The financials, if we're continuing to have a great bull market, that's a tailwind to the financials. There's several other ones, but it's not that those two stories are in contrast with one another. They can still work side by side, and we've seen that all year long.
Absolutely. Yeah. That's kind of stuff that we're trying to sort through and find out. And it's just so great to have you doing the heavy lifting for us and go through all those tickers and find the ones that are really looking attractive. So thanks for doing that for us, Blane.
Absolutely. Yeah, I'm really glad to do it. I appreciate you having me on for today's eye opener. I always love getting to sit down and do some market analysis and, tell people what I'm seeing out there in the markets, what I think, really should be drawing traders' eyes and then giving them an idea of how, to actually, actionable idea of how to play it. So appreciate the opportunity, John.
Yep, no worries. Well, folks, definitely make sure you keep an eye out and sign up to get in this room with us and watch these replays. Follow us on Telegram. There'll be links in the email that you found this video through, and we'll look forward to seeing you all soon. Take care, Blane.
Yep, you too, John. Thanks so much.